You owe back taxes to the IRS. You really want to get the problem under control, but you'd also like to pay less than you actually owe. So you jump on irs.gov and start playing around with the IRS's offer and compromise pre-qualification tool. You enter your income and your expenses, and then you start to enter your assets and liabilities. Just then, the calculator tells you that you don't qualify because you have too much equity in your primary residence. But is this really the case? Can I settle my tax debt if I have equity in my primary residence? That's the topic of today's video on the other side of the break.
1-877 Levy King, Levy Levy King, 1-877 Levy King, LevyKing.com.
Owe back taxes to the IRS? Call the Levy King. He's the best. 877 Levy King, LevyKing.com.
1-877 Levy King, LevyKing.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877 Levy King, LevyKing.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I'll teach you how to stop IRS liens, levies, and garnishments without paying the tax in full. How you can set up the payment plan that you want and not the one that they want, and how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years, and you can buy it right now for $19.99. But I want to give you a copy of the book absolutely free. Just go over to my website, www.endthetaxnightmare.com, and enter your name and email, and I'll send you a copy right now. No charge, not even for shipping. Totally free. But before we go any further with the video, please take a moment to subscribe to my channel. And don't forget to smash that like button for the YouTube algorithm. And hit the notification bell so you'll be notified each and every time we drop a new video. Finally, you can follow us on Facebook as well as Instagram. Okay, guys, let's dive into today's content. Okay, so the question in this video is, how do you settle your tax debt when you have net equity in your assets? The answer is an offer in compromise based on effective tax administration or a partial pay installment agreement. Those are basically going to be the two options to be able to settle your tax debt and pay less than you actually owe when you have equity in your house. So we're going to take a look at those two solutions and how they would play out for this particular example. First up is the offer in compromise. In order to understand the offer in compromise, you need to first understand something called reasonable collection potential, or RCP. The RCP is what the IRS can expect to collect from you within the statute of limitations. That is, within the time that they have available to collect the debt by law. It's basically the liquidation value of all of your assets plus your monthly disposable income. If these two things together are less than the tax debt, the IRS can accept an offer that is at least equal to your RCP. In our example, the taxpayer owes $50,000 to the IRS. He makes $5,000 per month and has $5,960 in allowable monthly expenses. Therefore, his monthly disposable income is zero. So far, so good. But his net asset value is a different story. His primary residence is worth $600,000 and he owes $400,000 on his mortgage. In this case, our taxpayer's RCP is $80,000 because of the home equity. At first glance, he doesn't seem like he would qualify for an offer since he only has $50,000 in tax debt, which is less than his RCP. However, let's take a look at an offer based on effective tax administration, and we may find that the story changes. An OIC based on effective tax administration, which I'm going to call an ETA offer, is where you actually have the ability to pay the tax in full based on your RCP, but you are asking the IRS to accept less than the RCP amount. In other words, you're asking the IRS not to force you to liquidate the home equity or include its value in your offer, because doing so would cause a financial hardship. An OIC can be considered under the effective tax administration criteria when these three things are the case. 1, there is no doubt that you owe the tax. 2, you can prove economic hardship. And 3, an OIC would not undermine compliance with other tax laws and regulations. The key here is going to be proving economic hardship. One method is to prove that you cannot refinance your home and pull out enough equity to pay the debt. Maybe you don't have enough money in your monthly salary to qualify for the new mortgage payment. Maybe your credit score is too low to qualify. Maybe the bank is unwilling to grant the loan because you have too much other debt. Maybe it's a combination of all of these. Another method is to prove that you couldn't afford to sell the home and move into another home. Maybe you don't make enough money to rent a suitable apartment in your area for you and your family. Or maybe it's your credit. Or maybe once you sell the home and pay the IRS and a realtor and all the other fees, there's no money left over to move your family. The key here is going to be that you're going to need to demonstrate that liquidating the equity in the home would cause a financial hardship. Before I move on to the partial pay installment agreement, I want to make it clear that this will not be an easy process. An ETA offer is not an easy thing to bring about. Most offers that are submitted without net equity and assets are rejected once they get to the IRS's Central Offer and Compromise Unit. And I've never seen an ETA offer accepted by Central OIC. So my expectation is that pretty much all of them are going to be initially rejected. However, you do have appeal rights whenever the IRS rejects your offer, and it is in appeals that I've seen the most success with these types of cases. So you'll need to make sure your offer is really well prepared and submitted to Central OIC as usual, but do so fully expecting that it will in fact be rejected. And when that happens, you need to be ready with your appeal because you have a better chance of winning in appeals. Personally, I've never seen a taxpayer who doesn't do this for a living go through the process and come out successfully. So in my opinion, an ETA offer is not a do-it-yourself project. So give yourself at least a fighting chance and hire a pro, like me. Shameless plug. Before I move on to the partial pay installment agreement, I want to make it clear that this will not be an easy process. An ETA offer is not an easy thing to bring about. Most offers that are submitted without net equity and assets are rejected once they get to the IRS's Central Offer and Compromise Unit. And I've never seen an ETA offer accepted by Central OIC. So my expectation is that pretty much all of them are going to be initially rejected. However, you do have appeal rights whenever the IRS rejects your offer, and it is in appeals that I've seen the most success with these types of cases. So you'll need to make sure your offer is really well prepared and submitted to Central OIC as usual, but do so fully expecting that it will in fact be rejected. And when that happens, you need to be ready with your appeal because you have a better chance of winning in appeals. Personally, I've never seen a taxpayer who doesn't do this for a living go through the process and come out successfully. So in my opinion, an ETA offer is not a do-it-yourself project. So give yourself at least a fighting chance and hire a pro, like me. Shameless plug. The next option is the partial pay installment agreement, which is where the taxpayer makes monthly payments that are less than the full amount needed to fully pay the tax, plus the interest and the penalties before the collection statute expiration date. Authority for the partial pay comes from Section 6159A of the Internal Revenue Code, which provides that the IRS may accept an installment agreement if the agreement will result in full or partial collection of the tax. This video is getting a little too long, so I won't go through all the details of the partial pay installment agreement. Instead, I want to point you to this video, which I just posted last week, which was devoted in its entirety to the partial pay. But I will say that when you have net equity and assets, it's much more likely that the partial pay installment agreement is going to be accepted versus an ETA offer. So if I was a betting man, I would say probably go with the partial pay as opposed to the ETA offer, especially if you're going to try to do this yourself. In summary, yes, you can settle your tax debt even when you have home equity. You can submit an ETA offer, but it's very likely that your initial OIC package will be rejected and you'll likely need to appeal. The partial pay installment agreement is another great option to reduce your debt even if you have net equity and assets. Speaking of reducing your debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? You see, no two cases are exactly alike, so how do you know exactly how much you can settle for? Well, lucky for you that I've created a free tool to help you get qualified for a fresh start. Just head over to www.levyking.com. Click the link below that you see here on your down in the details. Follow the prompts and answer a few simple questions, and we'll help you figure out your eligibility. That website again, you see it right here, is www.levyking.com. Or you can give us a call at 1-877-LEVY-KING. Well, that's it for this week, guys. Talk to you later. Bye.
Owe back taxes to the IRS? Call the Levy King. He's the best. 877-LEVY-KING. LevyKing.com.
1-877